Hello, everybody. Welcome to Tuesday. The S&P 500 was down 1.4% today. Really amazing day altogether. We finally got back down to this kind of 4,200 level. We got to 4,211 today. In a way, I'm kind of just wanting to get it over with. As I mentioned before, between 4,200 and 4,300, there's really no support. Almost nothing could probably keep us from getting down to 4,200, in my opinion, especially in an environment where we're already coming down. It's going to continue to follow that particular path. But there are some good things that are happening here that I think are really important. Number one is the amount of decline that's happened so quickly. We've stretched really, really hard. And so the RSI, which is a relative strength index, is one of the stretch measures that I look at, hit below 30 today at 28. Oftentimes you'll see a bounce off of those numbers with buyers coming in. You also see the fear index, the VIX index, it's called VIX, is intraday today was above 20, which is another gauge that kind of is stretched out, not wildly, but somewhat so. And oftentimes when it gets in that neighborhood, you'll see a bounce there also. We're down into the top of this range, 4,200. The range is about 4,200 to 4,050. We spent a lot of time in there, so there should be some good support. And we're just above the 200-day moving average, which again is another level of support for the market as far as that goes. So this is kind of the point we've been waiting to. I'm happy to get to this sooner than later, to be honest, and see how this is going to play out. If we bounce off of this, we could get some short covering and a rally to get us back up through the end of the year. If we don't, and we fall below that 4,050, then we'll have to take some measures. But right now we're in a traditional up market, and you look at that by, are the lows higher each time? Yes, even this low is higher than the last low. You get below 4,050, then you're looking at a different scenario. But so far, the lows are higher. One of the other things to look at is the 200-day moving average. Is the price above the 200-day moving average? Yes. Is the 200-day moving average going up? Yes. Is the 50-day moving average higher than the 200-day moving average? Yes. These are all classic things for the primary trend being in an uptrend. And so you kind of want to hang in there. You want to kind of let this, play through. When that primary trend changes, then you want to deal with that. So, for example, if you look at the bond market has 200-day moving average going down, 50-day moving average is below the 200-day moving average, and the price is below both of those. So that's why we've been in T-bills for the bond market for quite a while, and that worked out to be a pretty good trade so far. So, watch the primary trend, understand where we're at, understand that you get these minor trends all the time that kind of go the opposite direction of the primary trend. So far, this is a minor trend. Now, one of the problems with investing is you can't tell when a minor one turns into a major until it starts to turn into a major. But when we get below the 200-day moving average, we get below that 4,050 level, we can start to make some adjustments to, the concepts as far as that goes. We have been ratcheting into some more conservative pieces as, the market has come down since the end of July, but we haven't, totally moved out of the market or anything like that in this particular environment. I wouldn't recommend it. There's still a lot of good things that are going to happen here. We got third quarter earning reports that are going to come out. I think those are good. I wouldn't be surprised to see some surprises there because that's been happening consistently across all of these quarters. One of the catalysts today was kind of ironic in that we had 9.6 million new jobs open, or total jobs open, reported today. It was at 9 million. Now it hit a high of 11.4 million, and you would think that if we had more jobs open, that's a good thing. But of course, inflation's the big worry right now, and it allows the Federal Reserve to stay higher for longer, or maybe even raise rates. And that environment, makes the stock market nervous and the bond market nervous. So I don't know, my impression right now, and you're going to start seeing a lot of negative articles and talking about things that are happening. This is the same type of stuff that happened, last October when we ended up with a pretty historic run upward and such too. So, keep overall balanced perspective on what's happening as far as that goes. This at the moment is a minor move down from the major move that is up. And I'll let you know when that changes, but that's the way you have to kind of take a look at these things as they go. So anyway, that's what's happening today. Be very interested to see how tomorrow works out, and look forward to talking to you then. Thank you very much.